Hello, welcome to this screencast on petty cash. Let's ask ourselves two questions. Firstly, what is petty cash and why is there a petty cash fund? Well, petty cash is an amount of cash kept on hand to pay for minor expenditures such as purchasing coffees for a company meeting. This is used when it is not sensible to make any disbursement by check or any other form of transaction. So why does a business use a petty cash fund? Well, since cash is highly desirable due to its liquidity, petty cash is highly beneficial for a business when it comes to making small transactions. The petty cash fund will always go through a three-stage cycle. Firstly, establishing the fund, following this making payments from the fund, and finally, replenishing the fund. To make this easy to understand, we will use Daniel's Diners as our example. Daniel's Diners were looking to create a petty cash fund. To do this, they will first need to designate a certain amount of cash to the petty cash fund, such as $600. Since the petty cash account is an asset, Daniel's Diners will debit $600 to the petty cash account and then credit $600 from the cash account. Since both petty cash and cash are assets, they ultimately cancel out, meaning the assets equals liabilities plus equity is unaffected. Making payments from the account. Daniel's Diners wants to now use the petty cash fund to reimburse Ethan, the store manager, who purchased $100 worth of napkins with his own money. A key point that is very important to remember is that payments made through the fund do not have a journal entry. Instead, journal entries are recorded in the replenishing stage. In order for Ethan to claim his reimbursement, he will need to fill out a form along with providing a receipt showing that he did in fact purchase $100 worth of napkins. Finally, in order to replenish the petty cash account, they will record the original balance of $600, take away the current balance, which is $500. This will equal the cash to replenish being $100, and they will record the supplies receipt of $100. The final step is to record the replenishment in the general journal entries by debiting supplies expense by $100 and crediting cash $100. It is extremely important to note that we do not record petty cash, as the account will be staying the same, since when using the fund we do not record anything, we leave the petty cash account as it is, in this case $600. It is possible for there to be receipt errors or reimbursement mistakes, causing more or less cash than they thought there would be. This is then recorded to a temporary account called cash short and over, which is credited if over and debited if short.